Iliad Africa has benefited from a restructuring of its business last year, reporting headline earnings per share of 30 cents for the 6 months to June, from less than a cent a year ago. Joining me on Newsleader with more on the results and the prospects is CEO Eugene Beneke. Eugene, thanks very much for coming through. So it has been a period of change for the group, and it's also come through a very difficult economic period, because I should imagine most businesses in your area are struggling.
Yes, correctly so. The business environment is very competitive. We've been busy for the last couple of years, Stephen, systematically implementing various key initiatives in the business. We changed our brand architecture in our general building materials division to a single brand, Buco. That process, the launch and the revamping of our stores, was completed about a year ago. A lot of time and effort spent in marketing the brand, building brand equity. We're very pleased with the progress. Also a major milestone for us at the end of July, where we completed the comprehensive process of putting all of our stores on a single IT platform, and that leaves significant opportunities, more standardization. We also made a conscious decision a year ago to adjust the portfolio, and I'm pleased to say that we've successfully implemented that, and the benefits from that is showing in the results. So a tough trading environment, but some of the benefits of those key decisions we've made coming through in the numbers.
Do you think the changes you have made over the past year or two positions you for an environment like this?
Well, we took a view on the future and wanting to be very competitive, and life around us and the business world changes at a fast speed, and there were certain key decisions required, and we did it because we believe it was necessary for the future and it would enhance our competitive position. And always some more work left, but pleased with the initial results of most of those initiatives.
Take us through the decision to go for a single brand strategy, because you must have had value in some of the existing brands. So up here in Gauteng, Ferreira's a very well-known brand. That's also been replaced by Buco. Why go for a single brand?
Yes, some of those, or all of those regional brands stood us well over time. But we believe there's strength in single identity. It allows you to optimize your marketing spend. And it was also important for us to give a more consistent proposition to our customers. And all of those arguments, or the entire rationale, led to the decision to go the monolithic brand route.
Anything that stands out in particular that's resulted in this turnaround in your earnings?
Well, the 4.6% revenue growth on comparable stores reflects a changing trading environment. Pleased with an improvement on the gross margin percentage, although that's more about internal efficiencies than the market. Net finance costs down, our borrowing levels improved by close to 60 million, mostly due to disposal income. So all of that led to the earnings result of approximately 30 cents, which in this environment we're pleased with.
I mean, you talked about margin improvement coming from cost savings, because it is quite a competitive market out there, so it doesn't give you much pricing power, does it?
Yes, it is very competitive, and we've got to look for all ways and means to increase our competitive position. So having done a lot of work and implemented a lot of initiatives, the focus going forward is about ways and means to enhance margin, but also most importantly, looking for opportunities to expand the business and grow.
Is the rationalization finished with by now?
Yes, we're comfortable with our portfolio, so no further changes that we expect in the short to medium term. We're looking for opportunities to grow the business organically. We in a macro environment that provides its challenges. We believe there won't be exponential growth; it will be gradual. We look forward to opening up 2 new Buco stores before the end of the year. And whilst there's nothing specific on the table, if the appropriate acquisition opportunities does cross our table, we'll definitely consider those.
Any parts of the business you'd like to strengthen? Because just looking at the commentary today, specialised building materials doing pretty well. General building materials a bit mixed, performing better inland than it did at the coast. Which area of the business would you like to strengthen?
Yes, the coastal regions not quite as buoyant as some of the inland regions, specifically in the Western Cape and also in the KwaZulu-Natal. The market under pressure, but if you work hard and you work smart, whatever opportunities for growth there is out there, we will find them.
How are you seeing the customer at this point? Because you really cater for all customers. So you've got your DIY homeowners, you've also got large-scale developments and construction groups. I mean, are they all feeling the pinch?
Consumers are definitely under pressure. Yes, as far as building plans passed, it's pleasing to see that those those KPIs are improving, also mortgage loans on new and existing buildings. But it's about confidence. Yes, it's about the qualitative macro key indicators, but in that whole process we need to build confidence, and we don't see the confidence as yet, and we can see that consumers are under pressure.
So I mean, from this base that you've built, if you do see any improvements in economic conditions, then you are well positioned for that.
Yes, we believe we're well positioned, as much as we do believe that the growth will be gradual for a while to come. Ultimately, we all need residences, businesses need offices, and on the long term, it is a growth industry, and we look forward to capitalize on that as that gradual growth returns to the market.
What are you hearing from some of your customers, some of those construction companies that perhaps use you, because that's a sector that has been under pressure, bits of light coming now and again, but they're still waiting for all that spending to come through? Yes,
very much so. There's been a lot of stock in the market. A few years ago, a lot of developments in the market. Macroeconomically, the subprime crisis had a big impact, a lot of stock in the market. But if you look around you, especially in the major metropoles, you see more and more activity. So gradually, things on the improve.
Well, you mentioned the new single platform that you're moving the businesses onto. What sort of cost savings does that lead to further down the line? Because I should imagine a bit more purchasing power as well for a single brand if you're going through. Give us some of those benefits you're seeing.
Yeah, on the IT platform, we're seeing some of those benefits in the way we manage our stock. It's more transparency, the stock mix, the stock aging. We're scoping out opportunities at the back end of the business, no finite position on what that would entail and what the benefits would be, but at the very least opportunities for standardization of processes and that process being more effective in the way we do business.
And are you getting improved purchasing power with this single brand?
It's been well supported by the suppliers, and our procurement model has evolved significantly over the last few years, and all of it aimed at putting us in a position to leverage the size of our basket more and more.
What was the second half of the year looking like for you, Eugene?
Yeah, it remains very challenging, the trading environment.
Well, we saw growth numbers out today, pretty dismal for the second quarter of the year, and it looks like it's going to stay like that for a while.
GDP numbers not meeting expectations, retail sales, the same applies. So a second half of the year where we believe there's opportunities for growth, but importantly, I think the growth that the market will be delivering is gradual.
Eugene, we have to leave it there. Thank you very much for coming through today.
Thanks to you.
That's Eugene Beneke. He's the CEO of Iliad Africa.